The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the day a little bit differently today. Instead of looking at the DAX on a daily chart, we're going to look at it on a monthly chart. Our good friend across the pond waiting for the big Brexit vote tonight at 7 p.m. That would be London time. That'll be at 7 p.m. That would be late afternoon for us here in the U.S., so it'll be 5 hours difference into New York, but that'll be a big thing. The odds are that she's going to get decimated. That's what the bookmakers are putting their money on, but they were wrong in Brexit, back before, so she has to pull a rabbit out of her hat. But looking at the DAX monthly chart, folks, you're going to see some really interesting things. You see those dark lines there where it shows high to high, 34 months, high to low, 34 months. That's very good symmetry. When we talk about harmony and symmetry, that's what we're really looking at. And if you look at that low, it came in exactly at the 61% retracement. And we've been talking about that in the stock index futures here in the United States for the last, ever since December the 26th when we had that bottom. And now we've had this pretty good rally into this important time frame that we got coming right now. And by the way, we will have Norm Winsky on the 17th, so he will be on Thursday. Friday, of course, I won't be here, but we'll be back on Tuesday. We have a holiday on Monday, so that's another thing that we have to keep in mind. But the Brexit vote, whatever that thing is they're going to do today might be the end of Theresa May. But we've seen this before, and sometimes it doesn't happen. Now, if we look at what's happening with the stock market in the UK, what's going on, you'll notice that it had the big ABCD pattern up here, finishing at the just a tad above the 61% retracement. Missed it by just a little bit, but completed the perfect ABCD pattern. Sold off a little bit this morning, is now rallying a little bit. So it appears they're a little nervous over there about what this vote is going to be. Frankly, I don't know much about what's going on over there. I have two very, very dear friends that are extremely smart, and they are on the opposite sides of the pool table, folks. One of them thinks they should be in Brexit, and the other one thinks they should exit. So you pay your money and you take your choice. You don't know which one is going to happen. Now, one of the things that we talked about yesterday, of course, was the natural gas. We had a big move in natural gas, and the reason behind it was brought out today by one of the hedge funds that talks about hedge funds and stuff, and that was the fact that we had this giant polar wind coming in, and you can see the big sell-off that we had here. We've been following natural gas in the Tiger Den for quite some time, ever since Mr. Z recommended buying it at 280 before it went to 490. So it's a really great thing to trade, and it has a tremendous amount of volatility, as we've seen over and over and over again, and that's the real key. We highlighted that really big island reversal. This is what was caused by that news report that came out regarding the this polar vortex that was coming in. And if you can see here, you can see the big gap up here on Monday. We gapped from 315 all the way up to 336. That was a $2,000 gap. It continued to go another $4,000 higher, and it stopped exactly at the 78% level of the December ABCD pattern, and exactly at the 382 of the original high going back in November. That is a really key number, folks, so keep an eye on that. We got as low as 328, so we dropped almost $4,000 overnight in natural gas. So this is not for the faint of heart, but it is tradable. It really is. With a $5 stop, it's certainly tradable, because I'm watching it, intraday with one of our TFNN folks here that happens to trade natural gas quite a bit, and he brought to my attention the fact that we hit those numbers last night, and I just wanted to share them with you. But it's a pretty wild one, but it is certainly tradable, but it's not for the faint of heart. If you're going to start to learn trading, don't start looking at the natural gas, because you're going to have to take extra digitalis to keep your heart from going completely berserk. That's the main thing. Yesterday, we had a really nice young man visiting us today, or yesterday, for, well, Sunday and Monday, and he was, we've been friends for a while, and he came out to, trade together and work, and he was very excited, of course, But anyway, when he got to the office and he saw the oak floor with the Gartley pattern in it, and he saw the Italian marble clock with all the Fibonacci patterns and all the ratios and stuff that was made for us by one of our students in Houston, Texas, and one other, he saw the painting, the oil painting that I've had for 50 years from Drexel days, showing the patterns and the Cougarans and all that other stuff. But the highlight of the whole day was about 10:30 in the morning. Got a call from John Hill. John's 93 years old, and he's going to be 90. Well, he's going to be 93 next month, and he's still trading exactly like he was when I first met him 60 years ago, and 55 years ago. And it was really nice talking to him. And we're going to, if you ever get a chance, if you ever want to go down to visit him, let me know. He's down there in Hendersonville, North Carolina, out there on the ranch. He still runs Futures Truth. His sons trade with him. John Jr. trades out of Connecticut. Holly trades out of Connecticut. And Lundy trades out of Atlanta. By the way, those of you in Atlanta, if you got a couple extra tickets to the Super Bowl, I'd like to take my grandson down to it. I saw the original prices being posted yesterday. Only $6,500 for one ticket for a football game. Judge is ruling on that. I'd have to really rethink spending $6,500 on a ticket to see anything. And wow, that's a pretty tough one. Anyway, let's move on to some of these other markets that we need to talk about. First of all, let me remind you folks, when we were talking about the soybeans yesterday, that is a very, very long-term that is a very, very long-term pattern that we're looking at. And it has to be, the prices are really low now in beans, mainly because of this, this Chinese thing that we got going on with the tariffs and all that. Plus, we've got, big crops. We've had, 4 years of, crops with no problems. That's an outlier event, folks. That's not happened before. And, if we have any type of a crop problem, this soybean situation that we're looking at has some great opportunity. You don't get 10-to-1 odds when you're the favorite. And I look at Theresa May. She's got odds 10-to-1 against her today. And so, the bet is, if you want to take a long shot, that she's going to pull a rabbit out of the hat. And it would take a big rabbit. So we'll see. Those of you that were with us back during the Brexit thing, we were looking at that as a potential thing that would really move the market in the British pound, and in fact it did. The British pound was spiking up to that 150 level in the British pound when Brexit occurred, and bada bing, bada boom, the next day, it had a little bit of a drop of about 17 points. We happened to be short that for the 24/7. We covered it way too soon. We covered it down around the 131 level, but still, it was a big move. And we got another one coming, I think, here. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back, and I want to remind you tonight David White is going to have a special webinar about nuclear, things that are going on, nuclear weapons for trading and stuff that I think it would really be great for you to listen to. He has 2 letters here at TFNN, The Path of Least Resistance and also The Technology Insider. And David, without doubt, is one of the best read people I have ever met. I mean, he's like having a mini Google in your back pocket. So if you get a chance, I would really highly suggest you watch that. He's very smart at what he does. The things that he has are really state-of-the-art. So I would certainly, highly recommend listening to David White's program as you get a chance to increase your knowledge here in these markets. Also, I don't know if I mentioned this yesterday, but we have a Gartley pattern in the process of forming here in Bitcoin. You'll notice here we had a butterfly bottom. From there we rallied from 3,200 all the way up to 4,250. And then we've made a beautiful ABCD pattern down here that should end right around this 3,400 level. That's a 1.27 expansion to the downside and a 78% retracement on the upside. Remember, the long-term ABCD pattern in Bitcoin going back to 2010 comes in at 3,800, and we're trading several $100s below that. But remember, we went from we're figuring around $100 is what we're looking at. We're not going to do that 6-cent stuff from 2007, but when Bitcoin first came out. But we've had and we rallied up to 19,500. Now we're trading a lot lower. Now, this is the 4th time that we've had an over 80% correction. I believe they've all averaged about 83%. So, this is not about cryptocurrencies. I believe it's about blockchain technology. But, and again, we don't know if these patterns are going to work or not. But, we'll just have to do one step at a time. If we take a look at what happened here in the E-mini last night, we got up and we made, believe it or not, we went up and made a high by half of 1 point. We got up to 26.0 and we didn't quite make that 26.04 that we were looking for. And then we had a pretty good sell-off. We backed off about 20 points from that level. But we still have not made the ABCD pattern in the Dow Jones Industrial Average, nor have we completed in the E-mini S&P. Both of those, the S&P number, of course, most of you know here, comes in at around 2612 to 2620, based on, which ABCD low you're taking, but they're double up there, so it really doesn't make a lot of difference. So we're going to see what's happened here the next few days. Someone's asking a question about cannabis stocks. Folks, I really don't do anything in that kind of stuff. I have no interest in it. I just don't think morally it's right. I think it's, I imagine, I don't know anything about that stuff, so I just better shut up and move on. That's the easiest thing to do when you have something like that going on. Let's take a look here at those Treasury bonds, folks. They've had a pretty good rally here over the past several weeks. We've now sold off a couple of points from the high. There's a pretty strong probability now that we're getting ready to see interest rates go higher. And we're seeing that in the notes. We're seeing that in the bonds. So pay close attention to that. And another reason for paying close attention to it is something that we did post yesterday, but is worthy of posting it again. And that is this weekly Treasury note cycle that we got from Cycles Research, Bill Meridian. And you'll notice that it was due to top in late December and early January, and here we are on the 15th of January, where we are starting to turn down, at least from that smaller area. So that's the main thing. Hold on, folks. I have my little beeping machine is coming on, and that's because the British pound is getting hit some more. That means the votes are probably starting to come in, and that's going to make it a little bit difficult for Theresa May today. But you never know; they can always pull a rabbit out of the hat. That's no question about that. And sometimes those rabbits bite like very, very angry saber-toothed titles. How is that for pulling something out of the hat? Let me get this one up here to really look at. Let's take a look here at the Netflix is raising prices. Why doesn't Apple raise prices? I don't understand that. Let's take a look here at the euro, folks, over the last 14 trading days. You'll see we had the ABCD pattern on the upside, 1570. That was really that number on that was a retracement number from the high that we made at 116.40 that was made New Year's Day. That was a very inauspicious number, but it is a true trade that went on up there, more than one. And now you can see we've had a 3-drive pattern, beautiful ABCD format coming in at the 61% retracement at 114.10. We hit that just about half hour ago, hit it spot on. So that should be really strong support in the euro. But in fact, Apple has raised iPhone. Oh, that's right. Over the past year or two, yes, because now it's, I think, $1,000. In fact, John Jameson just bought the middle of the line iPhone over in UK, and he had to pay $1,200 US is what it amounted to. So it's even more expensive over there. So my friends, use a nice little Walmart LG flip phone. Really works great. Has a camera, even takes text messages, which I'm unable to answer because I don't do any texting and I don't do social networking, and I'm not planning on doing any, but maybe things will change. I don't know. We'll have to do one thing at a time, but we'll see what's going on. Okay, let's move on here to one other thing that I did mention the other day that is extremely important in all of these markets. If you remember that monthly chart that I showed you on the DAX, we've already seen the chart on the New York Stock Exchange Index and the Dow Jones, the NASDAQ, the importance of those numbers. But if we go across the pond way over to China, you're going to see that we made a major 61% retracement, 78% retracement there. We did the same thing in the the emerging markets did exactly the same thing. Multiple confirmations of cycles. And speaking of cycles, we're going to have Stan Harley on here in about 5 minutes, and we're going to be talking a little bit about the new cycles research from Foundation for the Study of Cycles. It's going to be funded by Jake Bernstein, Larry Williams, and Tom DeMark. And they're going to be not selling software. They're going to be giving information, so it might get back to the old way that Edward and Dewey wanted it, was a subscription basis. And if we do, that'll be a good thing. Now, they're going to be having a free webinar here. I believe it's Saturday, and I'm going to post that information for you so that if you want to go to this free webinar for the Foundation of Study of Cycles, Jake Bernstein's going to be given, and Jake's a pretty smart guy, and I think it's something you should all listen to. The price is right, folks. The price is right. Free is always good. Now, Norm always offers a double your money back guarantee on his free seminar, so this would be a good one in cycles. This is how I got my start in cycles. Jake Bernstein was there in San Francisco back in 1970 when I met John Hill. Also, Larry Williams was there. Tom DeMark was way too young. Anyway, let's take a break. We'll be right back with Stan Harley of the Harley Stock Market Cycles.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Harley Stock Market Letter on the line. Stan, are you there?
Good morning, Larry, LG flip phone guy.
Hey, how are you, my friend? Listen, I want to talk to you a little bit about the stock market here, but if you give us a rough idea of where you think we are, Stan, when we're finished with that, I'd like to talk to you a little bit about the things that are going on at the Foundations for the Study of Cycles. Let's talk about the stock market first. What do you think here?
Absolutely. I found your comment, incidentally, a couple of minutes ago about using LG flip phones very interesting. I had one of those too a number of years ago. Stock market. Larry, I think we've probably seen an important low here on December the 26th. I track a number of things, looking at long-term, monthly, weekly, daily charts, and the plethora of evidence that I have under my microscope says that the December 26 lows were probably it. There's a cycle on the monthly charts that dominates that time frame that averages about 4 years, 49 months. That cycle waxes and wanes like all cycles do. And I think this was another one of those cycles. It contracted a bit, probably about 36 months, but nevertheless, I think that's what we saw here.
Wow.
If we,
Stan, Stan, just for a second, when I was looking at your letter, when I saw that 49.2 month cycle that you had over the last 8 years, I was actually shocked at how accurate it was. I mean, it was just absolutely spot on. That itself was worthy of the subscription, in my opinion, just looking at that one, because it was really quite spectacular. So excuse me for interrupting, but I just want to tell you that I thought that was really a great one.
Well, thank you. That took many years to find that, by the way.
I can imagine.
Yeah, if I look at Fibonacci counts, and that's something I know you and the listeners are very familiar with. If you add 144 weeks, very prominent Fibonacci number, to the February 16th, 2016 low, if you were to add, say, 377 weeks to the October 2011 low, and a number of others, we could just get a magnificent clustering right around December 26, 2018. And for that reason, I think because of that Fibonacci confluence, that to me supports my thesis that that was probably a very important low. Now, having said that, well, I also note we declined from high to low about 20%. And that's what these declines typically see, is something on the order of 20%. And this was right at darn near 20.00%, very, very close. A pattern to look at that this recent decline that was very, very similar to was the 2011 decline. And that decline from high to low went approximately 68 trading days. I think it might have been 69, but in the neighborhood of 68 trading days, and the averages dropped very sharply, made a low on August the 9th. We had a 4.5% reversal on that day. We chopped around for about 40 days and made a secondary low, slightly lower low, in October of that year. And from that point, we powered higher. If you look at the present environment, it is very, very similar, not a Xerox copy, but very, very similar. From high to low, we again came down in the order of about 68 trading days. Did a 4% intraday reversal, just like we did back in 2011. And now we're chopping around. I think just like in 2011, I don't think we're going to rocket higher from the get-go here. I think we've got some sideways chop that could last for about another month, just like in 2011. And if we get the secondary low in later in February, as I expect, from that point we should push higher. I think investors would be wise to essentially not sell the rips but buy the dips, because I think we're still in a secular bull market. I think we have another 4 years of this thing before we hit a major, major pinnacle high. But in the near term, Larry, I think the lows are in. That's my take. I also look at a number of the market internals, advances and declines, new highs, new lows, unchanged issues, and we hit extremes that are normally seen at these 49-month cycle bottoms. And so from that synopsis there, I think one needs to be bullish. That's my perspective.
I was particularly interested in your analysis of the Case-Shiller housing thing. That was really cool. I mean, that's got some of the most beautiful cycle stuff that I remember. And I think you should. It's okay if I post that to the folks to let them see what that looks like, because I think that's the epitome of cycle stuff. And I wanted to bring this to your attention to let the folks know. Now, There it is. You'll see the Case-Shiller Home Index, and it really shows the cycles, and the way that you measure these cycles and stuff is just really really amazing. I really like it.
The Case-Shiller data, for those who are not aware, it tracks several indices across the country. There's a national index. There are 20 separate regional indices, and there are a plethora of small county area regional indices. That data is very, very cyclical, as one can see on the chart. In studying the LA data in particular, which is very the waveform across all time frames looks essentially similar, very, very similar. But I track the LA data in particular because I'm from the West Coast, lived in Los Angeles for many, many years. There is very clear evidence, as you can see there on the screen, of a 64-month cycle. And it defined the top in June of 1990, the low in March of 96, nailed the peak in the summer of 06, again the bottom in February 2012, and now we're powering higher. That cycle, of course, skipped a beat a couple of times, once in May of 2001. It also skipped a beat in July of 2017. And as you know, being a cycles guy, Larry, cycles do that. You know,
do they ever? They invert just when you think they're not going to.
Sometimes they invert. Sometimes they skip a beat, expand, contract. That's just the nature of the business. It's a marvelous tool, but it has some nuances that we all need to be aware of. Nevertheless, the data analysis, when I do a regression modeling, that is, I plug all the data points in and attempt to compute a mathematical equation that defines those points, and then I use that to project in the future. It tells me that the next recurrence in this 64-month rhythm is due in late 2022, right in the November timeframe. And the standard deviation on that analysis, by the way, is about 2.3 months. Now, in the very short term, I know a number of regional indices, particularly in the West, are seeing some pullback, and that's evident also on the LA chart. It looks like the LA chart, as well as a number of other indices around the country, probably topped out this summer in August. By the way, that peak came 144 Fibonacci months from the summer 2006 high. So what I'm looking for in terms of home prices, I'm looking for prices to pull back just a little bit. When a market breaks out to a new high, it's very, very common to see that push in the new high ground stall briefly, pull back and test the breakout point. And I believe that's exactly what's going on now. And I think we'll
Hey, stay with us, Stan. Stay with us, Stan. I want to talk a little bit about this cycle seminar coming up by Jake Bernstein. Hey, Stan Harley, the Harley Market Letter. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley, the Harley Stock Market Letter. Stan, I don't know if you're aware of this, but the Foundation for the Study of Cycles has gone through another transformation. The fellow that was running it, the young man David Perales, he was from Bulgaria, and he moved over there about a year ago, and he passed away unexpectedly, evidently sometime late last year, and now it's being taken over by Richard Smith, and they've brought in a couple other people. Jake Bernstein's going to get involved. Tom DeMark's going to be involved, and so is Jake Bernstein. And Jake is giving a seminar, a free seminar on Saturday to talk about it. What they're trying to do is to, Perales was interested in selling expensive software, somewhere between $5,000 and a lot, but they want to get back to the old information age like they used to have it many, many years ago when Dewey ran it, and then Tudor Jones had it for a while until he got too busy, managing money, and now they're trying to get back into that. So do you remember the old days when we used to get stuff from Dewey when we were at Conti and stuff and had those meetings? I remember some of the papers years ago that was all information. You gave a donation if you wanted to, but it was basically a great way to learn cycles, and that's how I learned cycles, and I learned them, and then Hearst did the whole thing. He wrote his whole book based on some of the stuff that he got from the Foundation of Cycles. So I think it'll be a good thing. You have an opinion on it?
Yeah, I do. I got involved with the Foundation for the Study of Cycles 30-some-odd years ago when they were based in Irvine, California. Richard Logie was the director at the time.
Yes,
I went to all the meetings.
Yes.
And it was a very well-run organization. Now, he, of course, depended to a large degree on donations. I can remember standing in his office one time, and he was on the phone with Paul Tudor Jones begging for just $100,000 to meet payroll. So they had a great organization. They had a monthly publication, but they struggled financially, as you know. I got my grounding in cycles from that organization. And when I lived in California, I'd go down there monthly, and we had some great lunches and evening meetings, and we had rubber chicken for dinner and talk cycles trash. It was fun stuff. Seriously, yes. Richard Logie, I think, did an outstanding job running that organization. I can recall very early on in my technical analysis career, I was a little skeptical of cycles because of their nuances. He gave a presentation, Larry, one time in which he went back and looked at the cycles in war and battles going back, I don't know, 5,000, 6,000, 7,000 years, as far back as he could get the data. And I recall in the spring of 1990, he put a chart up on the screen for all of us who were there, and he said, I don't know where in the world it's going to happen, but I get a cycle spike in August of 1990. Somewhere in the world, we're going to have a major battle. And all of us looked at each other and kind of rolled our eyes. Really? Well, you know what happened in August of 1990.
That was
Iraq invaded Kuwait. And
Yeah,
I'll
that's
tell
right.
you
That's
what,
exactly
from that point forward, I became a believer.
Yeah,
I converted immediately, and I started devouring everything I could find on cycles, and it kind of got to where I am today. And absolutely, cycles are a tremendous tool for analyzing, forecasting markets. You need to know about the nuances, expansions and contractions and skipping the beats and things like that. And I take it a little step further. I do a very detailed regression analysis of the data points, but it's a phenomenal tool. I think this is great that it's coming back. I did hear that David Morales passed away. I never met him. But
I didn't either.
Yeah,
I talked to him on a few times, but I never met him.
He took it in an interesting direction. I'm kind of glad to see it's coming back. I know Jake. Met him. He and I did a cruise out to the Bahamas. Oh gosh, many years ago, and we both did some seminars on the ship. And I, of course, know Larry Williams. I know Tom DeMark personally as well. Great folks. So I have a very positive feeling about this. I think it's great that they're bringing it back again.
I do too. I remember that meeting down in Orange County when they moved it down there because I was invited to speak. This was 1988, and I just published the book Astro Cycles, The Trader's Viewpoint, and David Williams was a good friend of Gertrude Shirk, and they wanted me to give the speech there, and so I did. And as you remember, it was an absolutely incredible building with the highest tech stuff you could possibly have, and they had these incredible slides that would come down with a what do you call those things? Yeah, my mind has slipped a little bit here. But anyway, there was this big graph behind me that you could project out on the things I was using for my PowerPoint, and I took my marker and I circled these dates that were so important, and everybody started to laugh. Well, what I didn't realize that this was not to be done. It was supposed to be done on the the plate of the PowerPoint, not on the thing, and I actually ruined the darn thing. It cost me $150 to get the darn thing fixed, but everybody had a big laugh out of it. But boy, when they started laughing, and Paul Volcker was there that day, and Tudor Jones and Peter Leides, some people that I highly respect. But I made it through okay.
Stan Harley was there that day as well. I remember it very, very clear. I was right there in the audience, and yes, I had a good laugh. You did. You wrote on the glass. I remember that.
Yeah. Oh no, what have I done here? I thought I was, they were just laughing at my work, but they enjoyed the work. Another good thing that day is I was, what was the guy's name? As I get on, the numbers I still can remember, but I'm beginning to forget. Who was the guy that was in jail a lot? And he was there that day with his fiance. What's his name? Mr. Z, help me out here. You always watch his work. Shucks, I can't think of it. It's right on the tip of my tongue, and I'll remember it in a minute. But no, it wasn't Bill Gates. It was what was his name? What's the guy in New York was in prison for a while and then came back? I just can't remember his name.
I know exactly.
Anyway, I was talking to this girl, and she said, "What do you think of his presentation?" I said, "Well, it's fantastic." I said, "But I've never met anybody that arrogant." And she said, yeah, that's right. It was Martin Armstrong. He said, and she said, well, do you know him very well? She said, oh, yes. She said, I'm engaged to him. I said, oh, no. And then he came right over and we started chatting and stuff. But he was actually pretty nice. But, he should be, like Muhammad Ali said, if you're bragging and can do it, it ain't bragging. So anyway, that was back in the old days. Listen, I want to thank you for being on the show today, and great material. And if the folks want to reach you, what's the best way for them to get in touch with you, Stan?
It's the website harleymarketletter.com.
Okay, great. By the way, you know that Tom DeMark lives up there by you. He lives up there in the Scottsdale area in a very, very, very big house, and but he's a real nice guy.
I know it well. I've been there.
Yeah. He's a nice fellow too. Yeah, he sure is.
Sharp cookie for sure.
You bet. Well, thanks for joining us, buddy, and we'll have you on again soon. And may God bless and have a happy New Year, buddy.
Thank you. My pleasure.
You bet. Thanks a lot. Stan Harley, the Harley Stock Market Letters. Boy, there's a long time going back to those days. 30-some years, 40-some years, 50 years. You know, that's the real beauty of what we do here, folks. I've been blessed. I get to work every day. It's something that I love to do, so I'm always on vacation. But I won't be here Friday because the old doctor's got to put some pins in me to make sure I'm still healthy for another 20. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back, folks, and we're going to be looking at this S&P chart that I posted. We're looking at a price of possibly 2604 to 2612. Remember, 2612 completes the ABCD and also completes the 61% retracement on the long-term move from September down to December 26th, and we already know the importance of that. Stan Harley was just on showing you that 144-week and 49-month cycle that was there. And if we take a look at what our forecast is for today, pay good attention to the opening here in the first hour. That should be very interesting to see what happens. And we will take a look at it at that point. And that's another thing that we want to be watching, of course, is the fact that the Treasury bonds, given the fact that the stock market started strongly, the bonds are probably going to be a tad weaker, but I believe that the interest rates will be going higher shortly. The $64 question is whether they're going to continue going in that direction. Still a bit early to know that. The Canadian dollar is still working beautifully. It had a nice 38% retracement up there at that 132.90 level, now down about 60 pips from that level. The gold is still in a relatively tight trading range between the 1294. In fact, if we get much higher than where we are right now in gold, we've got a chance for a pretty good breakout if we can get above that 1297 level in the gold market, because it's going up with the stock market going up, and that in itself is a very, very unusual thing to think about. So that's what we're looking at today, folks. So remember, live every day in an attitude of gratitude, and may God bless. Be sure to tune in on the 17th for Mr. Winsky. Calls it by the minute, and we'll have a good time with him. And then we'll see you tomorrow on the flip side, when we're going to talk a little bit more about some grains that are going to look interesting here, because they're in the sewer, and that's where you got to look at them.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!